Hello and welcome. You're tuned into CNBC-TV18 Prime. Let's get cracking on a brand new episode of The Big C. I'm Manisha Gupta, back with your daily dose of commodities, cryptos and currencies. Quick look at the global equity markets. First of all, on the stocks on Wall Street closed Friday on a positive note. All three indices up anywhere between 0.5% to 0.6%. But it was a lackluster performance on a weekly basis. For the Dow Jones, it was the first loss in 3 weeks, while both the S&P 500 and Nasdaq were at their weakest since the month of August. However, Wall Street is still poised for a modest gain for the month of September. The S&P 500 is up 2.8% this month, while the Dow has gained 1.5%. The tech-heavy Nasdaq has been the outperformer with nearly 2.9% of a rally. The Asian markets, in the meanwhile, are largely in the green today, barring, of course, Nikkei, as you can see, down over 0.5%. Back home, persistent bearish signs as Nifty holds lows from Friday trading at around those 24,700 kind of levels. And after posting the best weekly gain in 3 months, the prices are edging lower for the crude oil prices following the resumption of exports from Iraq's Kurdistan after a halt of nearly 2.5 years. Meanwhile, Street is also pricing in another output hike from the OPEC in their October meeting. OPEC is likely to do raise of output by around nearly 137,000 barrels per day. Additionally, markets also remain hawk-eyed on the situation between Russia and Ukraine following those drone attacks that we saw Russia's energy structure that have been impacted. Take a look at the dollar index then, and that seems to be edging lower today following fears of a government shutdown amid what is a macro-heavy week for the United States as well. Various economic data coming in out from US is something that we will keep an eye on as well. Let's talk about the agriculture space first of all, and joining us to do that in our studios today is Sandeep Bhan. He's CEO at SD Guthrie International Trading. Sandeep, hi, thank you so much for joining in. And various experts now believe that global agriculture, especially US agriculture, is in a recession. We've seen most of the agri prices kind of decline, barring palm, and I'll come to that later. But do you see that also happening?
Thanks for having me. Yes, the impact of US is coming on the markets because US was to announce the biofuel policy, which they haven't announced yet. And China has not been buying their beans. Rather, China switched to Argentinian and other origin beans. It looks like US is under pressure on the bean oil front, which is having impact on this part of the world because bean oil is getting cheaper, palm is holding on well. Other than that, sport of palm's own fundamentals, which is where the production is coming lower, and in coming months we will see stocks all heading lower. So it's getting kind of a bit of a sport, but we are facing a tough competition from lower bean oil.
And Sandeep, would you say that in last 1 year or so, India also has found new sources of many of its edible oil? Initially, it was Malaysia and Indonesia. Now we have Thailand and we have China and more countries adding that to that.
If we see from the palm oil, yes, India now has Malaysia, Indonesia, Thailand, Papua New Guinea, Cambodia, Philippines. And then we have recently LATAM origin, which is basically Colombia, Honduras, and Guatemala. So yes, India has found many new sources, but what I was told, LATAM origin is basically that flow goes to Europe. Because of EUDR, that flow had started in anticipation that EUDR is going to happen. That flow started coming to India, but now EUDR getting delayed, so we might see that that flow goes back to Europe.
I do want to talk about EUDR, and this is the third time it's getting delayed?
Second time. It was to be implemented 1st January 2025 this year, now moved to another 1 year.
And how are you reading into that? Because that does change things for India, because there was some lagging behind in various countries, including India.
Well, it's very hard to take it serious now because if the year on year they keep on postponing, and when most of the companies were ready to offer the EUDR compliant oil. So we'll not see much of an impact of it now.
The other thing is about the B40 that Indonesia seems to be working with. And as you mentioned, it also is about US wanting to push their biofuels as an agenda. How much of that impact has the edible oil as a segment already taken in?
B40 has a significant impact on the palm oil, no doubt in that.
And it has been factored in?
It has been factored in. Now it's the B50. Indonesia has recently announced that they will first go for B45, and after that, a couple of months later, they will go to B50. And that's going to happen. Biofuel is there to stay. Indonesian biofuel story is going to happen, and B50 is going to happen. Next year will be a year of B50.
Sandeep, so when you look at palm, how much of that is an edible oil consumption right now, and how much do you see going in for fuel by the time it's 2026 end?
30% of the oil today is into the fuel
Overall?
side. Overall, yes. In Indonesia, if we see out of 48 million tons, we will have close to 15 million tons going into the biofuel. Rest is for food.
And do you see this as a segment or as a pattern continue to increase?
Oh, definitely. They will increase it. B50, once B50 is done, we might see B55.
And does it do better with prices? Because in the Indian markets, we've seen that ethanol doesn't necessarily bring prices down for us.
See, prices now are more, earlier it used to be supply and demand. But nowadays, supply and demand is all out of picture. It's all about policies and which country will come out with which policies. This year has been all in all policies, different tariffs, countries changing policies. So how new policies will come up, we don't. And all policies are heading towards supporting their agriculture produce. So palm is going to be no different. Palm is having firm support of Indonesian biofuel. It's only a matter of how high can it go. Bottom looks like very well supported.
If you look at the palm price trajectory as well, Sandeep, I mean, that also has been on the higher side, quite supported, would you say? So from here on, while most of the market participants are now getting bullish on palm, what is your own sense?
So we had, when this Argentinian tax came, we had a jitters in the industry because all of a sudden we had now very cheap soybean oil in a day, $45 drop, and it was about to impact palm, but within 2 days they withdrew the policy, and that kind of gave a floor. Okay, we are back to now. Palm is very well supported. In terms of price, it looks like, yes, we are now at the bottom level. This looks like beyond this going down is very hard. The only thing today is, if we see from crude palm oil perspective, it's all India. What India will do. India had a huge imports in August. September, there's a drawdown in the imports, mainly because the offtake of the finished product in India is not that good. What I gathered from the industry conference last week was that there's very slow offtake, which is having an impact on the purchasing power of the companies. Not much of a buying is coming in the palm oil. So that is kind of putting in the nearby period, bit of a dampener in the prices. The markets are not moving up. Very difficult. Without India, prices can't move. It all depends when India will step in. In anticipation of festival demand, they bought a lot of oil thinking demand will be good, but it did not translate into that. So now all eyes are on India when India will come to buy.
So what kind of imports are you envisaging then for the rest of this year on a monthly basis?
I think if bean oil is now getting, where palm oil is now $10, $15 premium to bean oil, and I think 600,000 to 700,000 would be the numbers I will be seeing for the next couple of months.
And where would that take the prices? You missed on that point.
Price is a $1 million question now. It's a very difficult price because we don't know which policy is going to come when. If fundamental-wise, I can say that it looks like prices are very well supported beyond dips to buy, because coming months is seasonally drop in the productions, and we will also see a very slow drawdown in the stocks. By next year, first quarter, we should see a stocks lower than 2 million tons. That kind of gives a very good support to the bottom side. Higher side will depend upon soybean oil. What will happen to, if soybean oil remains these prices, upside gets very tough. We say the kind of numbers that were given in the conference by the recent industry analysts of 5,000 ringgit, hard to say.
5,000 you think is coming?
Hard to say. If bean oil doesn't move, then palm oil going 5,000 will be very tough.
And where do you see a downside here? Where do you see supports?
I think current for 4,300 looks like it will remain well supported.
Coming also on the tariffs, and you spoke about that, has that impact also being absorbed now from various agriculture as a space?
Yes, if we see from the Argentinian perspective, that is done. We don't know which will come, which will be the next one. As of today, all tariff news are done. Tariff news of their B50 is done. All news, it's now kind of the next few months is more about India, what India will do.
Let's talk about India then. And the festival demand until now hasn't really been very supportive, and that is something most of the companies have said. But they are very, very hopeful that it will start picking up because the GST rationalization in some sense will bring in money, lower the prices. But we haven't seen that happen yet.
Yeah, because there was this inauspicious period of 15 days, they say, because in that period you don't see buying coming. Now they are all expecting buying to come. Let's hope that translates into buying this next few weeks.
This whole conversation about India getting into self-reliancy, do you see that happen? Do you see India continuing being a strong importer? 65% dependency right now. Do you see those numbers change at all?
We think India should be self-dependent. India should reduce its imports. Whatever support India needs from Malaysia or Indonesia in terms of boosting their plantation in India, we'll be happy to help them out. So as of now, it's going well. What I hear from our friends in the industry, it is going well in the southern region, in particularly in Telangana and Andhra Pradesh region. It's growing. So we should see it growing more.
India's palm oil mix, because of the way palm went into a premium, has disrupted the market in that sense as well. Do you see palm continuing to command a premium like that?
Next 6 months, I do see palm will be into premium. In fact, right now we are $10, $15 premium. The question is whether it will go back to what it started this year at $100 premium. Whether it goes to $100 premium, big question mark. But premium, yes, we will be on a premium for next at least 5 to 6 months. And that's what is going to push down the palm's demand from India, because from 1 million ton in August to 600 to 700,000 is mainly because of price spread. And if this spread remains $10, $20, 600 to 700. If it goes $100, back to 500,000 or even lower than that.
All right. So you do see India slightly weaning away from palm overall?
It has, of course, it has. If we see for this full year, it has dropped from 8.5 million ton. We are anticipating close to 7.5 million ton imports for the full calendar year of its imports. So it has impacted definitely. Bean oil has gained a lot. With sharp prices on bean oil, yes, it is at the cost of palm.
And the palm's usage that we see, well, food is one part of it, but industry is another very strong part of it. Do you think there can be a substitute for palm there, or palm will continue to command that market?
That palm, we call that more into the olorics part of. We had this crude palm kernel oil, which is directly in competition with the coconut oil. But this year, coconut oil and crude palm kernel oil spread went to more than $1,000, and that has never happened. It was first time in the history of palm industry that crude palm oil and coconut oil were $1,000 apart. That kind of neither anybody was able to afford coconut oil and crude palm kernel oil because the prices were dropping, nobody was buying. Now that spread has narrowed down to $500, even $300, $400. That has kind of now come back demand into the crude palm kernel oil. So we are seeing these oleochemical companies coming back into the market and buying now, which was quite absent in the first half of this year. But this second half of the year, we are seeing them back into the markets.
We've talked about Malaysia, Indonesia and India in a lot way. I want to speak about China now, and that really seems to be a disruptor in the markets yet again, disrupting on what they're buying, where they're buying. It's in case of metals as well. They've changed policy there. They've changed policies in various segments, especially commodities. How would you see China as a player emerging in?
China has become a king in the markets now. They can go to anywhere.
They always were.
Yes, absolutely. They diverted when this Argentina announced this tax, and within 2 days they bought close to $5 billion of seeds, and they're going everywhere. And in fact, it has impacted palm also because flood of seeds is coming into China, and bean oil now they are exporting to India. So wherever they are getting cheaper stuff, they are getting it, and they are now becoming exporters of bean oil, which is quite good for India. Okay, if beans from South America coming to China, processed there, and oil coming to India, another source of cheaper oil, why not?
But do you see China continuing to do that? And do you see a lot of changes in the world map, the way agricultural commodities have been traded until now?
Definitely global supply chains have changed. Like we say, LATAM oil to India, which has never happened first time. So people are looking into different supply chains from any part of the world. Wherever you can get the cheapest oil, it is coming. So the supply chains have definitely changed a lot.
Comment on the currency part as well, Sandeep, because with the Indian rupee decline, and a very sharp one that we've seen onto that, that of course seems to be impacting the import prices also. But that clearly has been the case with various other international currencies. How are you watching that space?
We see the currency has also definitely impacted the Indian buying power. But if you see from Malaysian ringgit perspective, ringgit is performing very well, and ringgit has done, it's just 4.2 now. Other day it even broke 4.18 close to. So that makes dollar terms price more expensive there, and Indian imports become more expensive because of landed price of rupee. So rupee is kind of holding back the buying power of India, because when we speak to the buyers, they say every day my disparity is increasing, currency is impacting.
Sandeep, comment on also on the Indian policies from here on, because the markets do anticipate that after festivals get done, you could be looking at some changes here. As an international seller, exporter, how are you looking inwards into India?
So either way, whether they bring in duty or they don't bring in duty, they need palm oil. So we are happy to help them into whether they need crude palm oil, they need refined palm oil. We'll be always there to supply to India.
Sandeep Bhan, as always, thank you so much for joining in, and thank you for coming to our studios with all that sense about edible oils, palm especially, and agriculture as a space as well. Really appreciate your time.
Thank you.
Well, with that, we'll go for a very short break, but don't go anywhere because we return and we talk about the non-agri space where you have seen gold, silver at all-time highs, run up in copper as well. Jonathan Barratt of ETO Markets will join in to talk all of that. Welcome back. Joining us as now is Jonathan Barratt. He's CIO at ETO Markets. Jonathan, hi, and what a day, what a week, what a month September has been. The kind of gains that we have seen in gold and silver both. I want to pick gold first. We started this year with $2650 an ounce. We are trading at $3,800 plus, 44% of gains, best year since 1979. Where are we headed from here?
Manisha, good morning. Look, I think that's what everyone wants to answer. Find the answer to. We're at record highs. All the inputs are there that will still continue to make it trade higher. So I think the market can just continue to go higher. I think some of the levels that people have looked at, was sort of like 4,200. But I think the important thing is while the ingredients are there for the rally to continue, it will continue to trade higher.
Jonathan, would you say on the charts, while it is overbought, I understand the momentum is still on the higher side. Who are these people buying now at 3,800?
Well, I think it's. I think when you look at the charts is obviously one direction, keeps going up. But then when you see the news that continues, the economic news that continues to come in, it supports this news. We're sort of, the PCE data out of the States, inflation data, it supports rate cuts. Whilst it does that, it supports, a weaker US dollar. That only helps gold. So there's this fundamental idea that continually supports the price going higher. And when it's technically, you can't really sell it. So the only really thing you can do is just to sit and hold on to your long positions and look for a turn before you take some profit. But it certainly looks as if it is continuing to rise.
Jonathan, are you advising fresh buys at these levels, or do you think that is something that should be avoided?
I think that should be something to be avoided at the moment. Particularly when we see not only the gold, and we might talk about silver a little bit later, but from experience, when markets start to behave like that, some people are saying that it just could be a blow off the top, and then all the shorts are squeezed. But I think it's fresh buying. I think there's people genuinely concerned, not just from the economic side, but also the geopolitical side. Where we're seeing the US and what political things are occurring there, what's happening in the Middle East. So I think there's a general view that people are rotating, trying to rotate sort of out of some assets and into gold, because I think there's a whole menagerie of risks out there, which is saying, well, I've got to have a piece of gold, and there's not enough supply of it at the moment. And as a result of that, the demand just forces its hand.
Some people are now, Jonathan, calling it a bubble.
I think the interesting thing there, perhaps not on the gold front, because we know that there's been a lot of central bank, but maybe on the silver side. And I think the silver market is very interesting at the moment, and it continues to trade higher, and we're getting very close to those record highs. It's something we've always talked about. The silver has been the laggard behind gold, but now it's just continuing to rise, sort of like every trading session. And it does feel as if we've had bubbles before, and I think not a lot of viewers were there, but 1980, 2011, these are the bubbles, and we're seeing massive movements to the downside. So the experienced trader is cautious on this run up in silver.
So what are your targets now for silver? Because we've done 47 plus kind of levels. Of course, slight pullback from those levels. 50 is an all-time high. Do you see that happen in the month of October, or would you give it year end?
No, I think it's sooner rather than later. In fact, when you look at 50, I think that market wants to wire that. We're only a couple of dollars off it. So let's have a look at the price reaction from there. Once it sort of gets to that level, and then we'll see. Remember, when in 1980, when we did have that reversal, when the Hunt brothers tried to corner the market dropped 40% on the Thursday in March. So lots of volatility we could be expected in the silver market. So there's an air of caution about anyone trying to buy it here, particularly on a leverage basis.
Oh, I totally agree. Jonathan, if, every year, the years that have seen such high volatility and such huge prices, there have been years following where we have seen a big correction as well. healthy pullback, correction, profit taking, name it what you want to. Would you say that that is what we can expect for gold and silver going forward? And if yes, would that be good buying levels again?
I think so. I think that that correction, when we get back to those levels, there's not a lot that hasn't changed, and there's still a lot of catch up with a lot of central banks. So they'll always see this as a store of value. And I think when you know the US has the largest gold holding in reserves, China, Russia, other countries are moving towards having gold as a store of value. So I think dips will be well supported by that fundamental need for gold as a store of value. Plus, I think until we get some political stability in the market, I think gold eventually will come under pressure. But I think at the end of the day, we've still got these political hangovers. Whilst they're there, I think you'll find that the gold will remain well bid on the dip. If they go away, it's a different story. We consolidate, but still, it's a store of value. You've got to have some in your back pocket.
I would keep the traders out of this conversation, Jonathan, but if we talk about investors and, well, I'm assuming that people have taken home a lot of money with the kind of doubling up of that, the way we've seen in the last 4 or 5 years for gold and silver both. From these current levels, you've talked about 4,200 for gold. I'm assuming if we talk about 3 and 5 years as a scenario, the levels would be much higher from here. For silver as well, what is it that you believe we could be looking at once $50 is done?
Well, I think we've got to check what's happening in that macroeconomic pool. What we've seen in interest rates and all those sorts of things. I think one of the fear that we do hold is that the macro world in terms of the tariffs and not just the fact that the tariffs are there and things are occurring, but what happens when the next government comes in and then changes them over again because they say it's not productive? So I think a store of value is still there. You know, we've got to look at $50. We've got to look at 4,200. By all rights, it can continue as long as those macros support it. And I do think they do support it at the moment. We've still got some time within the US administration to see what mess can be made there. So I do think it's very hard to put a level on it on the top side, because we are at record highs. But when I be guided by the fundamentals are there, and they tell me that it can continue to trade higher, even if we do get a dip, you're still biased is to have some in your back pocket.
There are various reports now out, Jonathan, which are talking about 60 and 70 and $80 an ounce for silver.
Look, I mean, I think it's, yes, you can put a number on it and you can say that it's going to be that quick. I get that, but the volatility is there. So I think if I were an investor and I wanted to buy and I didn't have any, I would take a small position here, knowing full well that it will correct, and then I'll have to buy again. Now that's the way I think you'd have to trade it if you didn't have it. Knowing full well that you're taking a yearly approach, and that would have to be a 2-3 year approach to what's happening, knowing full well that there is a volatility there, so you have to keep your powder dry. If you want to get into that market as a store of value, have some now, because you are right, it can aggressively trade to the top side, but then it can also aggressively trade to the downside, and you'd need to be sure about holding your positions.
Jonathan, coming on the dollar index as well, and we've seen that decline 9% in this year until now. With the kind of policies and conversations that we are looking at, what is your sense on that?
Look, I genuinely think that the US dollar, and if you look at what Trump's trying to put in, he needs a weaker dollar to support. So he needs a weaker dollar to support his export-orientated and domestic growth that he's looking for. And now he's taken that policy on. So I think without saying it, I think a weaker US dollar will stimulate more exports for the US. If he's trying to make the US a manufacturing hub, then he needs a weaker currency. So I think we will. Remember, it's a 9% depreciation, and I think the US can handle more of that as long as that inflation is intact, and as long as that labour market is all right and Fed Powell is comfortable with everything, then I do get this sense that the dollar will come under pressure.
Jonathan, coming on copper as well, and while of course we've been looking at some supports because of supply disruptions onto that one, it also is about China's statement that came in yesterday that they will now start to import a lot of these metals as well. How we know China buys everything that's cheaper, and I'm assuming if they're going to be buying copper and aluminum and zinc at these levels, Do they see it cheaper? Are they trying to change the game here too?
No, I don't think. I think China's always been there. China always buys into a rising market. They never buy the try to look for the low. But remember also in the copper market, with the Grasberg mine disaster, we've gone from a surplus to a deficit. So whilst we have that deficit in the supply of copper to the market, and that will go in from now until late 2026, then that's certainly going to support the price of copper. And in fact, copper, in my mind, is one commodity that should be a focus because it has had such a large correction, and you have that fundamental differential, which has been that disaster, which is going to lose a lot of supply into the market. So as a result of that, prices can only squeeze higher. So I actually think from here, copper is something that I would be looking at as a form of investment for the next year or two.
So Jonathan, gold is gold, silver is the next gold, and copper is the next gold?
I think copper's one that's very, very, it's more tempting to go into copper, and I think you'll get some good price rises from that.
All right. Jonathan, as always, thank you so much for joining in. And that's all the time that we have on Big C. But Jonathan, Sandeep, thank you so much for coming by, joining in and talking to us all things commodities, agri and non-agri as well. See you tomorrow with more news and updates. Thank you for watching.